what feels amazing, Derek?
What feels amazing?
That I have not experienced in quite a long time. Let me explain a job in which you go to work and for 12 months, you're trying to keep people in their seats. And you're trying to explain to your clients that the world is indeed not ending, even though everything that they're seeing on TV would lead them to believe that it might indeed be ending.
Yeah.
And so 12 months of that, here we are in January, and we look at our investment accounts, and we're up year to date since January 1st. I realize it's only been 13 days, but man, does that feel good.
Take what you can get. Yeah, for sure.
Yeah.
So, I mean, this is kind of interesting because it's such a mixed bag with the macroeconomic data that's coming out because, inflation's coming down, corporate earnings are relatively unfazed, wages are rising. It's just such a mixed bag. And then, we would expect the impacts of these rate hikes to start hitting, sometime this year. So, it's nice because it's a nice period of growth when we're not used to it, especially because we just got kicked in the teeth last year. But still some things on the horizon that could potentially be negative, but we'll take the wins when we get them.
Yeah, if you look at the banks, the big banks are reporting, and if you look at their balance sheet, you see that they're stockpiling assets right now, just in case we do get the recession that some people are calling for here. As you and I, discussed on numerous times, different episodes here, it's kind of a mixed bag of the signals you're getting in the sense that I think common sense would tell you with the rate at which we have increased interest rates, that we would see some sort of recession, coming here. We see that the yield curve has inverted, and that would indicate that there's a recession that's looming on the horizon here. And yet you've got unemployment at 3.5, which indicates that would indicate an economic boom. I don't feel like anybody feels like we are in an economic boom, but that's the signal that's coming out, that you wouldn't feel like we are on the verge of a recession at that unemployment rate.
Yeah, and especially because a lot of the recession stuff is kind of a self-fulfilling prophecy. Because if you look at one of the big recession indicators is consumer sentiment, or do consumers think that we're going to be in a recession, or we're going to go into a recession? So that's kind of a self-fulfilling prophecy, because if consumers think that we're going to go into a recession, they're less likely to spend. They're more likely going to hoard cash. And then if enough people do that, in the aggregate, that could actually decrease consumption. And then you kind of get that recession that everyone was planning for.
Yeah. It's funny. We have clients in here who are in the construction space, and right now they can't get the jobs. They got so many jobs to get to. So they don't feel anything about that. And then if you look at the tech space, you're seeing companies, lay off employees.
Mm-hmm. And the big investment banks, a lot of those, like Goldman Sachs, announced that they were going to lay off 1,500 employees, and then they increased that number to either an additional 3,000 or 3,000 total. But that space, you're noticing a lot of layoffs as well.
Well, I expect that to continue, Derek. I think we're going to continue to see a mixed bag. And I don't think there's seldom a situation. The only time that I can think about was maybe around 2017, where it felt like everything was positive news. There's always a mixed bag, right? There's always some risk on the horizon there. And you and I kind of got into, and I'd like you to maybe lead it off here. We did a portfolio construction review for the first quarter for our clients. And we talked about some of the headwinds and some of the positives that we're facing, and some of the headwinds that we're facing as well. I want to get into a different subject here, but let's touch really briefly on that. Yeah.
So for positives, I had the China reopening story. They were in zero COVID. It seems like that's alleviating. The conflict with Russia and Ukraine, that seems to be alleviating. At least, that's such a wild card that nobody really knows where that's going to go or what the broader implications of that are going to be. But if we saw there's at least a possibility that there hasn't been a dramatic escalation from where we kind of last touched on it. It's kind of out of the mainstream news cycle. So if some incremental step towards a resolution, that would be definitely positive for the commodity markets, for instance, because I know there's some strife between some countries in Europe and Russia, because some countries in Europe are talking about price caps on oil, and Russia saying we won't sell to anybody that puts a price cap on Russian oil. So there's still some conflict and still some economic conflict. But if tensions got really between Russia and Ukraine, you could see some of these other conflicts get alleviated. Supply chains continue to reopen up. We saw like the chip shortage was the one that was talked about all the time during COVID. That's definitely getting alleviated. I personally, like anybody that owns a PC, you might be shopping for GPUs. If you're in the market for those, you definitely notice the price of those. I mean, sometimes get cut in half. So these things were selling at crazy high premiums. You couldn't get your hands on one of these, and now they're selling at discounts. GDP growth is still, if you look at it on a 3-month annualized basis, I believe it was 3.8%, which I mean that's an impressive clip by any metric. I mean, and then we're talking about recession. Like if you were completely agnostic to like the future, the past, if you're just looking at the present moment, you would not think that the narrative right now is that we're going into a recession.
No, absolutely. I mean, just what we talked about. If I put you in a time machine, spun you around, and you landed right here in the present, and you looked out the window and you saw 3.5% unemployment and that growth in GDP, you would say, man, we are in the midst of an economic boom.
Mm-hmm. Yeah. The conflict is not right now. I think that is part of the reason why stocks are running up in the first couple of weeks here in January.
Plus, we got the inflation numbers that came out that were expected as well. So
inflation is
eroding, yeah.
And that's the big conflict with the Fed. Like that's if we're going to talk about headwinds, that is the major headwind, and it's not close. That is number one by far. Is that if inflation doesn't continue to break down like it is, the Fed will have to hike past 5%, which is where they're predicting, and that's markets are nowhere near pricing that in. So that's the major headwind. But we got inflation breaking down. I mean, how many months in a row now has it come in at expectations or below expectations? A lot of good information on that front. Certain parts of the basket, it's driven by parts of the basket that the Fed doesn't necessarily care about. But the headline number is coming down. So again, take the wins while you can get them, for sure.
Yeah, absolutely. If you look at the asset classes, I think you're finally seeing them behave as would be expected. And that is consumer staples have done fine. Healthcare has held up. Value has held up. And we kind of feel that shift is probably here, at least for the foreseeable future. We expect value to outperform growth. You're seeing gold. Gold has, since January 1st, has taken a run. I believe it's up roughly, 5% for the year or something like that.
Yeah, give or take, yeah. Bitcoin's run up like mad.
Yeah, and we had concerns about gold in the second half of 2022 because of how fast interest rates were rising. Sometimes gold faces some headwinds when we can be in a money market that pays 3.5% to 4.5%. But I think that the recession fears are enough that it's driving gold prices up. Plus, you're seeing big buyers of gold, whether that be banks and also sovereign nations as well.
Yeah, for sure. Yeah, I think that's. I don't know how strong that trend is. Clearly, there is a trend. If that continues at this pace, I mean, yeah, you could. I'm not a gold expert. There's like the gold bugs out there that'll be able to talk your ear off on gold. I'm not in that camp. So, I mean, take everything I say about gold with a grain of salt. But if this trend continues, yeah, gold should continue to perform in 2023, which would be unexpected considering typically gold doesn't do well with rising interest rates. But I think the rationale behind it is just the heightened geopolitical uncertainty and just more uncertainty in the market. Investors sort of flock towards gold.
Yeah, absolutely. I'm going to pivot here a little bit because I think I have a topic here that maybe we should have talked about a little bit earlier. And it was spurred by the Chat GPT, right? Which is the open source AI. And for anybody who has not seen that, that is an eye opener, especially if you have kids. I mean, holy mackerel. Type in any topic that you want to talk about with for example, here you could say, write me a 1,000-page essay on the Battle of Yorktown and write it to a fifth grader's knowledge. And it would spit out exactly what you're looking for.
It's crazy because you could even be like, if you didn't want to get caught, you could be like, here's the rubric, literally type in the rubric, get me a B+ on this paper. And
right.
It's that granular, like it can get it down to that specific detail. It's remarkable. It's a really cool piece of technology. Scares the crap out of me. Yeah, right. Yeah, exactly. Scares the crap out of me, but it is a really cool piece of technology.
It is really cool. And I think, so I don't think I'm, using hyperbole when I say if you look at the inventions that have changed the course of human history, you have the light bulb, you have the telephone, you have the internet. I don't think this is a stretch to say that this will have ramifications similar to what we have seen as far as taking light year leaps ahead as far as what we can do with this technology. I mean, Microsoft is a company that's out there right now trying to get its hands on this so that it can use it for its searches and everything else that it plans on doing.
Yeah, Microsoft was an early investor along with. I need to look into this. I don't know if the funding was equity based, like if people were like a venture style investment type deal, where Microsoft would be like, give them $1 million and for in exchange for equity, or if it was like more research focused because Elon Musk, Peter Thiel, Microsoft, a lot of these tech companies, there's a bunch of other billionaire characters that invested into this. I don't know if it was more interested in just the research, like developing the project, or if there was equity exchange. But Microsoft wanted like, I think it was maybe like 50% equity for $10 billion. I'm like, this will go, if that deal goes through and there's no like stipulations to the deal, I'm not uncertain, the billions thing, I'm not uncertain. But like I would be pretty confident that would be one of the greatest acquisitions of all time, because I don't think it's a stretch to say this thing will have 1 billion users, and they're probably going to do like a paid subscription type deal. Let's say $10 a month. I mean, you're talking some really serious money, and for $10 billion for 50%, I think it should be valued a lot higher than that. But I don't know all the terms of the deal and everything.
Yeah. So I'm playing around on the website, and like you, the fear a little bit began to come over me because some of the questions I'm asking, write me a persuasive email targeting, whatever specifics you want out of that. Write me code for this function. And it's pretty successful at doing that. And then you start thinking, how many professions out there are potentially antiquated because of this technology that is at the fingertips of anybody, right? And I think along the way, there's always these apprehensions as these new inventions come out. There's always that fear, right? I remember when the internet. You're a little bit too young for this, but I remember when the internet first came out, and I would do like a research paper, and I would cite these sources. I had professors and teachers that would not accept them because they came from the internet, right? They were not a book. They were not something that I could pull from the library. So therefore, they didn't have, the same, I guess, quality they thought in their mind of that. And so there's a bit of a learning curve that takes place in this, but there is no doubt that AI, whether you're looking at any field, I think it's going to be a part of everything. If I'm a mechanic, I'm probably going to need AI, some sort of AI, to tell me what the likelihood probability is going wrong with my car, especially as these cars become essentially computers on wheels. If I am a stock trader, I'm probably going to use AI to tell me where there might be some imbalances in the market, where I might see some profits ahead, where something might be undervalued, for sure. I mean, whether you're using that as a medical professional, I think AI is going to be a part of that. And at least for the foreseeable future, the people that I follow, the professionals I follow, that I listen to, they say that maybe highly unlikely that AI, completely erases the need for humans to work at a job. But I think you're going to find that these jobs, if you're not using AI, you're falling behind the curve dramatically.
I think the thing that I'd be worried about is not like replaces completely. I was actually just having a conversation about this. I think it just dramatically reduces the amount of people that you need. To think about Twitter, for example, if you're a Twitter engineer and you're trying to develop all these functionalities for the site, you only really need if you go to openai.com, Chat GPT, we are currently using Chat GPT 3, and this year they're going to release Chat GPT 4. So Chat GPT 3, it's trained on, I believe it was 170 billion parameters. It's a machine learning algorithm that learns based on 170 billion different inputs. Chat GPT 4 is going to be trained on 400 trillion parameters. So we're talking about many orders of magnitude better than what it already is. Yeah. And right now,
impressive.
Yeah, no, right now it's like one of the most impressive pieces of technology I've ever seen. But if you're a Twitter engineer, you could probably at least, it could replace your job, let's say. Any project, any functionality that you're trying to implement at Twitter, you could use Chat GPT, and if you query it long enough, it'll give you a solution to the problem you're trying to solve. So with Chat GPT 4, now we're talking about replacing like whole teams of engineers, and really you only need one person to query ChatGPT and another like senior engineer to just sign off on whatever you just did. So it used to be a team of 100 engineers. Now you only need 2 people theoretically. That's the bigger concern. And then what do you do with the 98 people that are no longer needed?
Right. Yep. And somebody would argue that new technology always opens up new fields that maybe previously weren't even expected to be there. And that might be the case. I mean, I hope that is true, right? Because otherwise we are looking at some form of universal income for people. Right. But, the thing that is amazing to me about IA or AI is that the quickness at which it evolves and learns, right? Because if I look at... I'm going to beat up on one thing here very shortly, but I'm going to, I think that it probably has a place in the future if we give it enough years. So there is an ETF out there, and the ETF's ticker symbol is AIEQ. This is AI powered equity ETF. And this ETF uses AI to pick what it believes are stocks that have the best potential for appreciation. So the goal of this ETF is to beat the market. And it's only a handful of years old. So if I look at back testing of this, doing it right now, so bear with me here. It only goes back to 2018. But track record for this since 2018, not so good. 2018 was a down year for the stock market. 2022 was a down year for the stock market. And this AI powered ETF performed much worse than the S&P 500. And then if I look at 2021, the S&P 500 beat it pretty handedly. So as of right now, I would not call it a success. And looking at the human component to this, if I peel back that wrapper and I look at, what are its top holdings? Novavax, number 1, which has lost 90% in the past year. Meta Platforms, number 3, which has lost about 60% in the trailing 12 months. GameStop is the number 6 holding. Roku, which has lost about 72%. Lyft, which has lost about 65%. So right now, it's obviously picking up things which it perceives as a value based on whatever metric it's looking at, revenue, or I'm not sure. But right now, you could argue that it's having a human hand to take a look at that and maybe nix a couple of suggestions would maybe do it well. But I think it'll be interesting to see what the track record is in the next 10 years or the next 5 years. As this AI program begins to learn and learn from its mistakes, will it be something that will repeatedly beat the market? I'm not sure. The other thing that is unknown is, you could use AI to see some imbalances in the market where there seems to be value, where there seems to be overpriced at. But I'm curious to see if the market will eventually react to that. If everybody at some point in time is using AI to make selections for their investments, does the market foresee that and be able to react to that? That'll be interesting to me.
Yeah, that's kind of what a lot of the big money on Wall Street now is basically like I don't know this as a fact, but I'd imagine like if you look at who really takes home the big paydays on Wall Street right now, I bet you it's a large chunk of them are the quants, the quantitative analysts. And basically all they're doing is just building algorithms and trying to inch out the other algorithms, like they're talking about millions of trades in a second, like they're just the high frequency trading. And it's basically whoever has the most powerful computer gets the returns. And like if we were going to try to do like high frequency trading, like building an algorithm or whatever to try to do this, we would get absolutely stomped out because it's just like ultra competitive, and you're basically competing with whoever has the most resources, who has the best computing power. So that's probably like with using AI, I feel like it's going to be the same thing where it's whoever has the best AI is still going to have a competitive edge. The thing that I would be interesting is if like it defaults to 1, but let's say like BlackRock develops an AI and it's just by far the best because they have like $10 trillion at their disposal. And it's just so far better than everybody else's. If it's just a giant vacuum for capital and it just pulls all capital into the, like, basically a black hole.
Mm-hmm. You'd have, it'll be interesting because you're going to have essentially traders doing the same thing, right? You would have, if that was the case, wouldn't you have crowded trades? Because essentially you would have everybody following the same AI for the most part.
Well, what would happen is there would be no, like, when the efficient market hypothesis is like every single thing is priced in at every given moment.
Yeah.
It would basically be like there would be no excess returns anywhere. Like, no matter where you would invest, it would be effectively the same as market return. There would be no possible way to get a better return than anybody else if everybody is trading or if everything is super effectively priced in. There's no contrarian view you could take to get a better return than somebody that's just in the market.
Yeah, interesting. So I think that's, I guess, getting back to my original point, I think that you're going to see, for better or worse, you could, as we move towards this technology here, right? Human beings don't have a great track record of having with every technology, whether it was the phone or it was the internet, there was the good that came with the bad, right? The good is with the internet, obviously, and the education improved, the sharing of knowledge improved, the quality of life improved. But then obviously you could look at social media and you could say, maybe this eroded us a bit as human beings. And I think that probably the same thing is going to be true for AI. You're going to have bad players out there. But I think we're going to see a dynamic shift in the way that all of our jobs are performed and how we actually perform them.
Yeah. One interesting thing that I was talking with Carly about was, so Microsoft owns Bing, or they run Bing or whatever. And Bing is talking about integrating Chat GPT, I'd imagine the newest one, into their search engine. So if that is trained on 400 trillion parameters and it's giving you incredibly accurate information, it can do predictions, it could do like literally anything that a human can do, and probably better from a job standpoint. Like, as far as like, if you pay somebody to do something or you have Chat GPT do it, Chat GPT will be better 99.999% of the time. So a lot of the things that small businesses try to do to expand their brand, like SEO, content creation, like, there would be no need for a search engine to try to find the best content that people are producing. They would just rely on their own AI machine learning algorithm like ChatGPT. Like, if we build a really good post around 60/40 portfolios, there would be no reason for Bing or Google to index that, because they would just give you their version of the best the best article about 60/40 portfolio, and it would be better than ours. It'd be better than whatever we could do.
Yeah. Imagine just saying that, hey, write me a murder mystery based on this scenario, this main characters. I mean, it could be done, right?
It has been done. Like, I've seen different ChatGPT prompts, like, write a screenplay, and it's actually been done. Like, that's not something that hasn't been done before.
Yeah, I was telling you a little bit before this. Google did a thing with there's a board game that's like 2,000 or 3,000 years old. That's called Go. It's a Chinese board game, mm-hmm. and they built an AI program and they taught it how to play the game, and they taught it different moves and strategies, and it began to learn and see these strategies, and then it began to run on its own. It began to play itself, and then of course it got to the point where it beat the best Go player in the world. Just like that same thing happened with chess, right? Mm-hmm. And then they scrapped that. And they started a brand new one, a Go 2.0, in which they taught it nothing, but all they taught it was the rules of the game. And then from there, it took over, and it started looking at possible moves. And it went from that to developing strategies that nobody had ever seen before. And of course, within a matter of time here, it again was the best player in the world, could beat the best Go player in the world, but we didn't teach it anything. It was essentially thinking on its own.
Mm-hmm. So we're in the business of compound growth. I think this is a really good example of that. It's because, like, the larger the data set that these computers are trained on, it basically builds on itself at a faster rate. So, I mean, if you want to put it in an investing analogy, it would be like investing $10,000 up front or investing $10 million up front. And then, like, you could have the same growth rate, But so take a computer that's at stage 1. Let's use our arbitrary values, and it gets 10% better every year. But then you can use all of that data and put it in a new computer that starts at level 10, and it grows at the same growth rate. That's going to go way further, way faster than the first one, just because you trained it on a larger data set. And that's what happened with the chess computers with I believe it was Deep Blue. I believe it was called Deep Blue, the one that beat Garry Kasparov. It was the first computer to beat the best. I mean, Garry Kasparov was the chess world champion at the time. And I believe he beat the first iteration of Deep Blue. And then when they rolled out the second version, that was the first time that Garry Kasparov had lost, like, period. He hasn't lost a chess game in, like, years, literal years. And then this was the first time he had lost a chess game in years. And then now the best chess computer is called Stockfish, and it's basically a million times better than all of the other chess computers. So like it couldn't even develop a way for a human to beat it. Like that's how far ahead this thing is. Like there's no chess computer in the world that can compete with it.
I think getting back to the ETF, the AI EQ uses Watson to make their stock picks, which is IBM's, right? IBM's
yeah,
version.
IBM. Yeah, I remember when that thing won Jeopardy. That was really cool to watch.
Yeah. All right, good stuff, Derek. Derek, I know it's a Friday here. You've got some stuff planned here. So where can people find us on social media?
As always, thanks everybody for listening to the podcast. If you liked it, like, share, subscribe, wherever you get your podcasts. Follow us on Facebook, Instagram, YouTube, LinkedIn. Subscribe to the newsletter by going to crosbyadvisory.com/contact. And we'll see you guys next week.
Keep in mind that Crosby Advisory is a registered investment advisor in the state of Ohio, Texas, and Florida. At any time, you can request our forms ADV 2A and 2B, which go into the business practices and qualifications of Crosby Advisory. Today on the show, Derek and I mentioned specific securities, and that is not a recommendation for you to buy them or sell them. Do your own homework. Make sure they are suitable for you. Keep in mind, investing involves risk, including the potential loss of principal, and you should carefully consider all risks and fees before making an investment.